All right, good morning once again. You're still watching TV47 Breakfast with me, Freddie Ndimuli. And after that conversation that Arno Dida was having, still on matters innovation and skill set, we now want to focus more on the banking sector. Innovation and technology in the banking sector, how Kenya's banks are building the future. And for this conversation this morning, we're privileged to have with us Onesmus Kingola, who's a Chief Information Officer, Credit Bank PLC, Banking Technology, Digital Transformation and Cybersecurity. A very long title, Bwana Kingola. Karibu sana, welcome to TV47.
Thank you so much.
So let's start here. What does a Chief Information Officer do at a bank?
Okay, thank you so much, Fred, for that question. It's a big title, of course, as you said. So Chief Digital and IT Officer combines both digitization and running of information technology in the bank. Oversees running of all the systems in the bank which serve the customers, innovation, improving and introducing new systems for customers, whereby the focus is more of addressing faster customer needs, ensuring our customers are served.
Talking about customers, and the bank customers really changed over time.
Yeah.
And the discussion today is about the transformation that the banks have had to go through to meet the demand by this customer. Now everything is on this gadget.
Yeah.
My banking, my data and everything. How much have bank operations had to change or transform over the last 5 years in as far as technology is concerned?
Okay, thank you for that question. Of course, we have seen a lot of transformation, especially thinking about 10 years, 5 years back. Initially, we used to have customers walking to the bank, banking halls, just to drop a check, to come and transact, pay bills. This has changed drastically. At the moment, customers are paying everything from the comfort of their rooms, comfort of where they are. Some of our customers have most likely they just visited the branch when they were opening the account. And even nowadays it has changed. We are onboarding customers remotely, even from our diaspora. They don't need even need to have known where our branches are. They just open, they start transacting, they bank, they pay, they collect and everything. So it has changed a lot. What we are seeing is that customers they want to be personalized. They want solutions which fit into them. So it has changed from customers going to the bank coming to the customers.
We're saying that probably in the next few years, this brick and mortar banks that we are used to are going to be a thing of the past. That once banking goes fully digital, no one will even need to know where the bank is.
Thank you for that. Of course, Fred, systems will never replace human beings. We still need customers. They still need that human touch. Customers still need to visit people and talk to them. I've seen it all depends with the segment of the customers. We still have the old customers who want to go and say hi to the branch manager every other day.
Asipoona manager only kama ameenda bank.
Only kama ameenda bank. They still want to go and see there to print a slip to see their balances. That will still remain there for some time. But now we are seeing a new segment of millennials who are tech savvy. They don't want to visit any branch. They just want to do everything from the comfort of their rooms. Now we also have the Gen Z. Those ones, even they don't know where the banks are. Sure, to give them solutions whereby they will not ever walk to the brick and mortar. So what we are seeing in future is that as much as we are digitizing, we'll see maybe the brick and mortar remaining as a sales offices, of course, and those are human touch points whereby customers can come and have that feeling of human.
Yes.
Yeah.
Now, it means that there's a new battlefront for banks. It's the innovations that you come up with, what digital solutions you're now offering to these new customers. From your standpoint at Credit Bank PLC, what is one of these innovations that have really struck you that probably you could say that this is a market leader?
Thank you. Actually, we have done a lot of digitization in Credit Bank. But if I could pick one or two, I'll start with our automated bid bonds. I think we are the front runners in this. It has never happened in the market. Customers have to walk to branches in other banks just to generate a bid bond.
A bid bond?
Yeah, bid bond. Like if you want to bid for a contract, you are required to have a bid bond for those processes for contracting. So what we have done, we have automated that process. When you go to our website, you can just log in, generate a bid bond automatically up to the limit of 20 million. and and it's authenticated, everything is secured, and you present it to a government office, and it's accepted. Yeah, it takes less than 5 minutes to generate that.
Wow.
It has really transformed that. Normally, it takes 2 days when you follow the manual process.
And you have to come to the branch.
Yeah, you have to come to the branch. You fill some few papers and here and there. This one you are just doing at seated in your office at home, and you generate that, and you end up having a bid bond within 5 minutes, of course. That's real transformation.
Right.
And we are very proud of it. Yeah.
The IT section, or the section that you had in the bank, used to be a few years back just a systems maintenance department. Now it means that you are more at the core of the main business of the bank?
Yeah, actually, previously we were being called cost center. And everyone was discussing about how many millions we are spending every year. But now it has changed. You know, IT has merged with digital to transform. IT is developing, digital is marketing the same solutions. So we are part of, we are on the table at the moment. We discuss with the business on how much revenue we are generating. Look at all these channels like the bid bond have said about the issue like our mobile banking, USD and all that, internet banking. They are generating income, especially even our APIs, which interconnect to all their other customers outside there and payment service providers. They are generating revenue across. So you find when the discussion is being made, you are not just discussing as a cost center from IT side. Now you are discussing about
on the table.
revenue. Yeah, on the and when the cake is being shared, we are also there. Yeah.
Of course, Kenya has been a leader in as far as digital transformation, even across the continent. Of course, because of mobile money and the success that it has registered. How have banks changed to adapt to this new Kenyan who understands and is tech savvy and responds better online?
Actually, initially, I've been in the banking sector for some time, almost 19 years, and I've worked in various banks, now in Credit Bank. What I've seen over time is that initially customers used to fit in one shoe, what the bank has. You want a product, this is what we have. But now we have seen banks transitioning to whereby now they are customizing products to customers. Let's say like our area of SMEs, whereby we are very strong in Credit Bank. You'll find that we don't just give a solution, one fit-all solution. We'll customize. We go to the extent now we customize. Fred needs this and all that. So the banking sector has to add to move very fast, and now to move to customization and personalization. And now we are even moving to another level called hyper-personalization, whereby I want to be treated as Onesimus. I don't want to be treated as a group of customers. Understand my needs, give me the solutions I need to take me to the next level.
Yes.
Yeah. So the banks are moving and following the customer very fast.
At what speed? That's a question, because most bank customers felt that with the rise in the number of fintechs, mobile money solutions and all these things, that banks were left playing catch up. People can get loans through mobile phones and other solutions. Do you feel like the banking sector is playing catch up?
No. Actually, if I would say, we are not playing catch up. What did is that there was some disruption. We have to accept that. But now immediately we move to another level of collaboration with the fintechs. We are able to collaborate, not competing. Initially it looks like competition. So at the moment you'll find a lot of the fintechs are integrating to the banks for the last mile. Let's say the fintechs you'll find maybe they don't have some licenses for, let's say, like pushing transaction to other banks, like through PesaLink. We are very strong in that. So many fintechs push their PesaLink transaction through Credit Bank, which is and we are pushing hundreds and thousands of transactions per day for the fintechs. The same way, we are also plugging into the fintech environments to ensure that we can bank their own customers. We are also complementing things like organizations like SACCOs. You know, initially SACCOs used to be on their own and banks themselves and fintechs on their side there. So at the moment, a SACCO which is sitting in Kenya, and they want to, maybe they have a customer who wants to send money from the US and UK. They can send the money through our rails, or direct to the SACCO directly, to the SACCO bank account. So what we are seeing is more of yes, there was that disruption which brought us together, and now we are winning together.
Yet some of these solutions offer what banks offered. You can save money, you can get a loan, you can get so many other different things, even on mobile money. You still feel there's no competition between those different platforms against the banks?
To me, Fred, I think the market is too huge. And if you look at Kenya, the banked and unbanked, it's just too huge to the extent. Everyone has their space, but still banks have the front, and we are front runners. If you look at the products we are offering, they are very competitive. Interest rates are also very competitive compared to the fintechs and the banks. Banks are able to give you loans even for longer periods. Fintechs will give you for a month or two. And if you look at it, we are also offering the short-term loans in our like in our mobile banking platform. You can get instant loans to the tune of 60,000 around there.
Yes.
Yeah, so we are also competing, but now we have that advantage because we can still we can still lend for a longer period, and also the rates are a bit regulated by the regulator. Yeah.
What has been the biggest challenge with technology, especially? You say there was disruption, and then now you had to come to a point where now you are with it. What has been the biggest challenge?
I think the biggest challenge to any technology is number one is around investment. Transformation of technology is normally very expensive. Then the other thing is about resistance of customers not moving as fast as you want them to move. They still want, there's that fear of onboarding new technology. It has always been a challenge, but over time we are seeing customers are embracing digitization as well. The other thing is about the issues around cybersecurity. Of course, it's still an issue. Every new technology which comes in, it comes with its own challenges. We are seeing things like even AI at the moment, whereby we are getting very huge challenges around cybersecurity, whereby I can receive a call with Fred's voice, and I can, but it's just something which is simulated. So we have quite a number of challenges across. The other thing was around interconnectivity, which was an issue. But now, like in Kenya, we have seen a lot of solutions, and especially the providers, mobile providers. We are seeing internet even going to the villages. So quite a lot has happened in Kenya. We will still continue seeing some challenges here, especially on the unbanked. We still have a big challenge of our customers who use maybe legacy devices. Of course, they can still access mobile services through USSD, even if you have the Katululu down there. But we still have areas in Kenya whereby there's no network at all. So that's also affects.
Talking about the knowledge gap, the kind of customers who are not able, who are not technologically savvy, how bad is a problem in Kenya?
It's still a problem, even to date. You see, in the cities, it's, most of the customers, you'll find that they are tech savvy and they have smartphones. But if you go to the rural areas, very few have smartphones. Then now we still have another critical customers, especially our SMEs. You'll find most of them, they don't have even their smartphones. Like when you go to the markets and all that, our very critical sectors like the border and all that, which needs to be banked, you find they are using Katululus and all that. But what we have seen, we have more customized our products so that they can reach them. Through the USSD, you can still borrow, you can still bank, you can pay your bills. Everything is still there. So that's happening, and we normally continuously do enlightenments to our customers just to ensure that they catch up with the technology. Yeah.
The other issue is about the speed at which technology is moving and changing. With AI, every 2 months something has to change. How are you handling that?
Yeah, I know AI is great for in the banking sector. We are seeing a lot happening in the credit space, and especially decisioning of credit, whereby immediately you can feed in information about a customer, and immediately you get that customer being scored and getting limits. Like the mobile loans, we normally use AI, of course, at the end of the day, just to score you. We are seeing a lot of, it's helping us on the areas around risk. I'm able to we are able to analyze quickly about trends, about honestness, how it transacts. Any exceptions we will flag as fraud, of course. We are seeing organizations really moving fast around customer experience. Initially, customer service teams used to be big rooms. I remember when I joined banking, it was 2 floors.
Yes.
Nowadays, we'll find 2. two people seated there, but the rest is just AI generated and supported. So what we are seeing, the way we are moving to catch up with the technology, which is moving every other day, it's more of having teams, development teams. They are every now and then just trying to learn what is happening outside there. But now critical for us, you see, banks are also regulated. You don't just wake up every morning and go and plug in new ideas in the environment. Just to ensure that you regulate, you comply with the regulator. At the same time, you ensure that you are fitting to the customers. Then the other thing we normally ensure that we do a lot of testing for whatever goes to in our systems, and we have very clearly rigor process to ensure that whatever goes outside there is secure for the customer. Number one, it's reliable and it's very stable. So we are trying to balance both of them, but we will not be left behind.
Yes.
We have to move with that speed as well.
And one of those things, points of panic for many people, even in the banking sector, is that technology will come and take our jobs.
Yeah.
Do you share those concerns, or are we now seeing more developers behind, what do you call them, behind the scenes, getting more jobs as compared to the other people who are in the sector?
Actually, the reality is that technology will take our jobs if we don't embrace the technology. But if we embrace the technology, we'll move with it. So what has been changing is that we are seeing, even in organizations, what we are doing, you don't fire people, you retrain them and you repackage them to do other roles, which are more of like the developers you have talked about. Nowadays, we need more developers. We need cloud architectures. We need security. You know, when we are moving very fast around technology, security becomes an issue. So we are seeing more experts moving our experts from certain lines, retraining them and moving them to where we need them.
So we have more people back end as developers, as opposed to customer service.
Exactly. Yeah.
Okay, let's go back to the issue of cybersecurity. And AI, you said, is a double-edged sword. It can assist in appraising or scoring a customer, but the same AI can be used to test your systems and probably even commit some fraud. How are you handling it?
Security remains very key for us, and especially in the banking sector, and specifically in credit bank. So the way we do is that we prioritize so much on our security environment by ensuring there's things called like patching. Patching is like ensuring your applications are updated. You ring fence them with the best solutions. Then at the same time, you end up onboarding your own resources who mimic penetration testing. Like that bad guy standing outside there, we also have our people standing outside there trying to mimic everything to ensure that we are more protected. I know every single day the bad guys are always trying to be one step ahead. But now with the collaboration with the providers, because we have like security providers, we are ensuring that we are ahead. Initially, we used to have updates like for security environment happening like weekly and all that. Nowadays, we have onboarded cloud-based solutions out of the providers there. Anytime, let's say even let's say for example a threat is picked in Argentina, it's updated all the way to Africa and to credit bank. So that is helping us to move very fast and also to try to be one step ahead of
There's a certain group of young Kenyans who have gone to school, study technology, and I understand they're called sharp boys. Who just sit somewhere with computers and SIM cards and phones and find ways of attacking systems like the ones you work on. How much of a problem is that? And I know many banks don't like to talk about this when their systems are infiltrated. They would not want the customers to know. But how much of a problem is that?
Okay, security threats are real, and they don't. It's not only in Kenya. They cut across the entire region, even across the world. I know Kenya, we had some unique cases we have been reading in the newspapers about those very sharp guys who are really threatening the cyber security environment for banking. I know banking is most of the time you'll find is a real target before everyone thinks there is a lot of money, believes there is a lot of money, that is. But what we are, I think we have gone to that extra mile, as I told you, through partnerships with our security providers and all that, and even having very huge teams inside the bank. Actually, we are also mimicking those bad boys seated there.
Uh-huh.
We are also hiring very good guys seated on our side, and also testing throughout with the same simulation methods, and even better, because as we are able to invest more than those bad boys out there. So we are mimicking and ensuring that we are one step ahead of them. But what I would say, from my assessment, the banking environment in Kenya is very secure, similar to where I'm working at the moment. It's quite secure, and we have also quite a lot of collaboration through the regulator. The regulator holds a lot of engagement sessions, Kenya bankers also, and we ensure that the banking platform is just secure across as well. Yeah.
Yes, there's also the issue of data protection.
Yeah.
Because now a lot of this details about your customers, that is also a risk that it can be breached. It's not just about stealing money. How do you handle data protection?
Of course, you understand there is the Data Protection Act in Kenya, which we are required, all of us, to implement. So the same way security we have taken security as part of the onboarding development of systems. Data protection is also the same way. We don't think about data protection at the end of when you want to take something to production. When you are starting to develop, I want to develop this system, it's a core banking, internet banking, and all these solutions. You start thinking about data protection from that edge, that level, and also security. So what we normally do is that we partner so much with the ODPC. When we are taking any systems live to production, we normally do our own assessment. Then we also share with them too for their opinion. So there's zero tolerance to data breach, of course. And especially for financial institutions, we are expected to 100% adhere to the Data Protection Act. Yeah.
Okay, what are some of these ideas and probably the lifespan of an innovation in the banking sector? Are you finding that some of the ideas that you work on are becoming obsolete? Or what happens? Because by early next year, a lot of things will have changed in as far as technological advancement is concerned.
I think banking, one thing I know is that as much as technology is changing outside there, the concept remains the same. Not much changing on the concept. So you'll still find us banks running with the legacy core banking systems. But what are we doing? We are not throwing away the core banking systems. We are introducing microservices in between and API gateways, whereby we can integrate at any time. We are moving. We still have our banks will still have their old core banking systems because they are very expensive. Of course, you need to see some return. But now you introduce other layers which can integrate outside there, like things like APIs, things like open banking. Open banking, these are the new concepts. But we are still running the old systems, but now we have that layer which gives us the opportunity to plug into external players, fintechs, circles, and all that. Yeah, and even customers. Customers are at the moment, like with our internet banking, they don't need to come to the branch. Initially, they used to run around with the flash disk, carrying their payrolls. Nowadays, they process the payrolls from inside their offices through our channels, anytime at night, during the day, 24/7. Yeah, so that's how the banking. We see, what we'll see in the next few months and years as technology changes will not overhaul everything, but you'll see more features coming through, and especially maybe just to point on the issue around data analytics and AI. Because we are moving to personalization, you'll see the banks trying to tweak their products and systems just to fit with the changing customer needs without just overhauling everything. Okay. Yeah.
You talked about an issue with connectivity, that yes, in urban centers, internet is readily available, so connectivity is okay. But yes, we understand that there are sections or parts of this country that are yet to be connected. Do you still now have to maintain physical buildings and old models for those ones?
Yeah.
How necessary is that, and how fast do you think you'll be able to do away with them?
Yes, thank you for that question. Yeah, we still have challenges of infrastructure across the country, some areas, but we have seen majority of the country at the moment. We have 4G and 5G being onboarded. So for the areas whereby we still need physical presence, we'll still need to remain, because any unbanked customer is still in Kenya is still very critical. I'm looking at how we have done is that as much as areas whereby we have maybe maybe degraded network, and maybe the customers have to come to the branches. We have maintained our branches all through, and we still maintain our infrastructure and our staff to the top to ensure that customers are able to come, they are able to bank, they are able to pay. At the same time, they are able to borrow at the same time. So those ones will remain for some time. But what I foresee in the coming days with the kind of transformation I've seen around the technology and connectivity, in the next 5 years, I still see very few customers going to the branches. And as I said earlier, it's only those customers who want to go and maybe say hi to the branch manager, or maybe they want some personalized services of like lending, although we foresee also lending moving so much to digitization. But we still have that small number of customers who will still need the personalized touch.
Yes.
Yeah.
Do you feel like between different banks, and you've said you worked for several, that you rate some of the products you develop against bank A or B and a similar product that they have? Do you rate your success against them?
Against each other. I think banks, as much as we are playing, we have different segments. You'll find some banks we have maybe target market. Like for Credit Bank, our niche market is the SME. That's where we play very strongly.
Okay.
And you'll find most of our products are addressed to the SMEs.
What are some of these products specifically for SMEs from Credit Bank that you can point out?
Okay, some of the products, like we have our mobile banking, which is very strong. We have also the USSD. We have our internet banking. We have the automated bid bonds. You remember these SMEs are the ones who normally apply for the bid bonds. We have other solutions like payment solutions for collecting called Connect to the Bank, whereby SMEs we can collect for them. Now we still have the borrowing options on the applications. Yeah, quite a lot. Then at the same time, as I said, you don't need to be seated in Kenya to be onboarded. When you go to our website at any time, you can do remote account opening, and we'll be able to process all that and also give you our wide proposition. We still have lending for SMEs. We are very strong around that.
Okay.
We have a big customer base. Yeah.
Do you find the need to have systems outside the bank to support some of these things you do? Probably because you work between banks.
Yes.
Like Bank A and Bank B could necessarily require some services that cut across.
Yes.
How much of the support infrastructure is available in Kenya?
Things like agency banking, we have collaborated with the posta. If you go to any posta branch, you still get credit bank services from there. So agency banking is still very strong. We are seeing banks moving to agents, but now with the current proposition of products, what we have at the moment, actually I don't foresee the reason for a customer going to the bank. But things like trade finance, what we have done, we have also partnered with the agents. You don't need to go to get in touch directly with the bank. You can still get our services through those integrations with our partners out there. Yeah, and the circles are also offering some of our services. Yeah.
Okay.
Yeah.
You talked about regulation, and I'm thinking it's central bank.
Yes.
Yes. What kind of regulation are we talking about when it comes to technology and transformation in the banking sector?
Of course, there is a regulation which has to be applied. Of course, when you are bringing on board new products, central bank has to look at it. New systems, before you go live, they need also to look at that. You need to submit to them reviews on some requirements, and especially things like cyber security, simplicity. One of the focus of the regulator is about simplicity. Solutions need to be very simple to customers, and they have really been focusing on that. The other thing we have seen is that regulator being key is on stability of systems. You can't be running systems which are not down always. Customers are not able to access. So they are very key on that. And when you have a downtimes, of course, you have to report to them with some explanation. So these has really made banks to ensure that we have 24/7 running banks. Actually, we normally call it always on. Should be on always for customers, because if they are digital customers, they need to access any time.
Yes, yet we still receive these messages that this system or the other will be down between this time and this time. And are we saying that there are still challenges in the sustainability of some of these systems to ensure they are always on?
Yeah, so Fred, thanks for that question. So what happens in a technology world, you need to keep on upgrading your system, fixing and making them maybe work better, especially when you are fixing areas whereby cybersecurity, you want to introduce new enhancements. It needs to sometimes it will force you the system to be down. But now what has happened to banking, and with this evolution where we are, let's say we are bringing down the core banking, you'll find the channels are working, because we have the integration layers which can be able to serve customers. You'll find ATMs working, channels still working, you're able to transact, while you have been told maybe one service will be down. Let's say, for example, cards are down. You'll find maybe the channels, the other accesses, we still have other access points, customers, whereby customers can access solutions. I think it's very difficult to see nowadays whereby the entire bank is down. You'll always find there is one of the services which is up and still serving the customers. And as I said, most of the time they are pushed by doing upgrades, fixes, and all that.
All right.
Yeah.
And a lot of these technology solutions probably are geared towards this new generation of bank customers, mainly Gen Zs, probably, who are now getting into employment and stuff like that. What special offering do you have for them as Credit Bank?
I think we are very transformative, and we are thinking about tomorrow's customer. Actually, we have been saying tomorrow's customer, but they are already there to this customer. So what we are doing is that we have really been enhancing our mobile solution to ensure that Gen Zs are able to get all the services there. They're able to pay things like, you see, something like eCitizen, which has 3,000 services inside there. We are already embedded in our applications. We are able to pay bills across electricity bill, DStv, and all that. Now we have also gone to the extent of Gen Zs don't want to go to the bank. They want to be able, and they are very tech savvy, and they know about their rights. So what they want the money to work for themselves. So we have gone to the extent of developing products like a saving product, which every single day a customer can deposit their money there, and it starts growing, and the customer will be able to see. And when they want to withdraw, they can withdraw. So that's how much we have really been working to ensure that we bank and enable our Gen Z and even the Gen Alpha, they can come on board without necessarily coming to the bank. I know the future looks like we embed payments and banking in social media platforms. I think you have had the experience of, like in China, whereby WeChat, you are able to do everything within WeChat.
On social media.
Social media. So we are, that's the thinking we are thinking now.
That's the direction you're taking.
Yeah, we are taking. We want that Gen Z, when they log into their WhatsApp, they're able to do their banking from there, very securely and authenticated. They just do, because what they want to chat. I want to do ABCD, this account, and all that, and they close, and they do their transaction. I want to invest my 1,000. Tomorrow you'll be able to check chatting. How much interest have I received? That's the direction we really want to.
Even investment.
Yeah, and investment.
Linking with things like money market funds,
exactly.
The Nairobi Stock Exchange and stuff like that.
Yeah, actually,
they can trade in shares.
Yes. Yeah, that should be the direction. They should be able to invest every single day and see their returns.
Yes.
And even now, our savings account is more of a moving to the direction of a MMF. Yeah, it's more structured like that, but aligned to the central bank.
Because the discussion today is about how Kenyan banks are building the future.
Yeah.
What does the future look like for you? Now that we are talking about Gen Zs and the direction you're taking of even using social media for banking.
Yeah. So the future of banking, the way I see it, is very little on the brick and mortar. Quite a lot of digitization, and as you said, customers should now be able to do 360. And the main thing about digitization, where I foresee banking, is the customers being us moving to the hyper personalization, whereby pricing should be on Onesmus, not a team. If my behavior is like this is how I do my things, I should get a different profile. Different.
It's like I have my own bank, individual bank.
Yes, and the future will be this. When, let's say, I finished school, the bank should notice that I opened my account when I was in high school. Now I've gotten my first job. They can see thoroughly. Let them predict for me what is next. What next do I need? Most likely they should know that I need a car. They should be coming to me, sending me alerts. We can give you a loan. After maybe they see I've done some transactions, like I've gotten married, for example, give me offers of where I can go to honeymoon. I want that personalization. And that's the direction we want to move. And now all that should be embedded in the device.
Okay.
Yeah.
We were talking about the gaps even contained in our curriculum, and there was something noted that most of our curriculum does not touch on financial literacy.
Yeah.
Many people come out of school and they do not understand what to do with their money.
Yeah.
Do you see that as a space that the banking sector could get into now that you're interacting very closely with individual bank customers?
I think that's very strong. What I did, Fred, sometime last year, I talked to our Gen Z employees, and I was asking them, what do you think should be done to the Gen Zs? You know what they told me? Mm-hmm. They want a solution which gives financial education. Mm-hmm. And that's what we have been thinking about on how to embed in our own application. But they still say, no, we want our own application separately there. So that's a discussion which has been there. So banks really need to address that. There's a big gap. And I talked to them and they gave me that feedback. They just need, as much as I'll be saving and all that, train me on how to use my money. Because we are getting the money I don't know how to use. So that's an area whereby we have really moved into it. We have been looking for a solution just to onboard, which now serves there. That cluster of customers. On top of that, if you go to our website, we have also onboarded some knowledge base for customers, whereby and especially for literacy, digital literacy. And also using our branches, we normally organize time to time sessions with our customers for that literacy. But for the young generation, I can tell you it's a real thing which a gap needs to be addressed. Yeah.
Finally, 10 years from now, where do you see the banking sector moving?
10 years from now, because things are moving very fast, I can see, actually we are already partnering with our provider Visa at the moment to onboard tokenization. It's called tokenization, whereby I'll be using my phone, my watch, just to tap. You know, most of the time...
That's where the money will be?
Yeah, the card. That's your card, like your Visa card, or your credit card or debit card or whatever, prepaid card, will be embedded in your phone or in your ring. Such devices, such that when you go to the supermarket, you don't need to remove your card. You have forgotten it into your car. You just tap most of the time you'll have your ring, you'll have your watch, you'll have another devices. So that will be one of the directions. But as we move forward, we are seeing like everything coming to smaller devices, of course. We are foreseeing customers' needs changing every other day. We will see our customers pushing us very fast to ensure that we are very much innovative. Finally, maybe we'll see very little of manual transactions happening. And definitely the other thing is about security. I foresee quite innovations around security just to ensure that we are one step ahead. And finally, I think the other thing I need to mention is, with the kind of trend we are seeing from AI, if we embrace AI very well, we'll see cost reduction in banking vis-a-vis the income. We'll see banks' incomes going up because you don't need a whole group of processors seated there to process loans and people posting. That one should be the thing of the first. In the next, not even 10 years, in the next 5 years, we should be getting to that point. Yeah. Very lean, intelligent banks. That should be the direction. Cash,
do you see a future where cash will no longer be there? We won't need the paper note once everything is on those devices?
It will be limited. It will still be in circulation, but very little. If we can bank digitally, like Mama Mboga, in Gikomba, when you move, nowadays even when you board the matatus, you don't need to carry cash. Initially, conductor, you have to give him cash to believe that's a transaction. So we are moving to that direction. 5 years, 10 years, cash will be very little. We'll see very few cash, they're called what? The cash carrying, cash on transit vehicles. Very few of them. Much of the things will be done digitally. It will be also an opportunity for the authorities and also even profiling of customers. Because at the moment, one problem we have been having with customers, and especially SMEs, they don't keep records. Yeah, they don't have records in any banking. When they come to you, they want to ask for maybe for credit. They don't have any records. That's why we are plugging in with the other providers like mobile providers, just to be able to consume maybe something like M-Pesa messages to profile that customers. So when you move everything to digital, it will be very easy for them even to get credit from the banks.
Wow.
Yeah.
Onesmus Kingola is a Chief Information Officer, Credit Bank PLC, Banking Technology, Digital Transformation and Cybersecurity. Talking about innovation and technology in the banking sector, how Kenya's banks are building the future. Yeah, 5-10 years from now, how will banking be? That has been the discussion, and you can access it on all our social media pages. This conversation will also be available online, and you can catch it as well on YouTube, where it's streaming live. You can also continue interacting with us on X, TV47 Digital, and on Facebook, TV47 Kenya, on Instagram as well, TV47 Kenya. Remember, the hashtag to use is TV47 Breakfast, hashtag Story Yetu. My handle is Fred Ndimuli. On behalf of the entire team behind this show, including my co-host Arno Dida, good morning.